Hello out there. We're live.
Are we live?
hmm
Wow. Oh, let me make sure. Yeah, I see us. Neat. The wonder of live stream technology.
The
So yeah, we're
future.
reacting. We're reacting to the Tesla earnings, right? Isn't that
Yeah.
the plan?
Yeah.
So yeah, Tesla's out with numbers. They missed analyst expectations on both the top and the bottom line. They reported adjusted earnings per share of 45 cents per share. Expectations on Wall Street were for 51 cents per share. And then they reported revenues of 21.3 billion. Expectations for revenue were 22.2 billion. So they missed on both revenue and earnings. It is important to note that the whisper number, which is kind of like the bigger, more like the rumored expectation, was lower. It was 41 cents. So their earnings results, they beat the lowered expectations for the company. Uh, so it's a little mixed bag. I think the stock had also kind of been beaten up in recent weeks for a lot of different reasons. Cybertruck recall, they fired 10% of their staff, like a lot of things. Elon Musk being a complete douche nozzle. There's just a lot of reasons for why the stock has been going down. So it is seeing a bit of a relief rally in after hours right now. The stock is up 10% now on the day. But it's important to note that this stock peaked in November of 2021 at $414.49 a share. It's currently trading to 156.31 per share. So it's down over 50% in the last, call it 2.5 years. So this is a stock that's well in a bear market, and now the results are starting to roll over. So that's not great. Some things that I noticed on the earnings release that they put out on their investor relations page that I thought was interesting. The company, they said, our company is currently between two major growth waves. The first one began with the global expansion of the Model 3 and Y platform, and we believe the next one will be initiated by advances in autonomy and the introduction of new products, including those built on our next generation vehicle platform. So they said in 2024, our vehicle production growth may notably be slower or lower than the growth rate achieved in 2023. They are attributing this to the work that's being done on the next generation. But it's important to note that they made like 400. Let me get the right number right. They made 433,371 vehicles during the quarter. They only delivered 386,810 vehicles. So this is the largest build in inventory in the history of this company.
Yeah. I had a waiting list for mine. Like I couldn't get mine right away. Now,
That was what, a year and a half, 2 years ago?
2 years ago. Yeah.
And now it's like I can get you a Model Y by tomorrow,
Yeah.
kind of thing.
And they
Uh,
did a price reduction of the Model Y as well, I believe.
multiple times. It's never been cheaper to buy a Tesla. They tend to market it based on the savings after energy savings and after the tax credit. So yeah, the numbers look really impressive if you're looking at it from a Tesla standpoint. It is important to note that if, and this isn't a political statement, but if Donald Trump wins, it's very likely that he's going to repeal the Inflation Reduction Act, and that would hurt demand for all electric vehicles, including Tesla,
That's just
because
facts.
they've
That's not
done it.
even political. That's just facts. Yeah.
Yeah, because Joe Biden is the one who put in the Inflation Reduction Act. Trump, during his first presidency, let the EV credits expire, and he seems to be kind of anti-EV in general. So yeah, the future of Tesla does kind of hinge on who wins this election. Oddly enough, the CEO of Tesla really dislikes Joe Biden, but Joe Biden has handed Tesla hundreds of millions of dollars in tax credits and also uh, opportunity credits for building factories that build batteries in America. So yeah, they're in an interesting spot when it comes to this fall. The election will affect, I think, Tesla in a big way.
I just think it's
Some
wild
other
how.
things.
Oh, sorry, good.
Mhm. No,
I
go
just
ahead.
I think it's just wild how like a lot of people I think just forget like At one point, gas in California was almost $8.
Hmm.
Like that can happen again and again and again. Like right now, it's low, right? Gas prices fluctuate, but like it's getting like it could get worse at any time. Like that's one of the reasons I
What
bought
are
one.
gas prices in Cali right now?
I think they're at like high fives, like five something a
That's
gallon.
not low. That's still ridiculously high.
Well, for California, that's like normal for us because we're super expensive. I'm sure in like Ohio, it's like what $2 a gallon, dollar
No,
ninety.
it's a little under 4 right now, but that's
Okay,
high for here.
that's high for
Like,
yeah for Ohio, yeah, especially
yeah.
yeah.
But I think the whole point is that as gas prices go up, the savings that you have from having an EV tend to also go up. So,
Yes.
yeah, that is one reason to own electric vehicles. But I want to point out some other things from these results. They had a negative free cash flow of 2.5 billion during the quarter. They said that AI infrastructure capex was $1 billion, so they spent $1 billion buying GPUs, basically. But then they also are seeing decreased profitability because they're ramping up the Cybertruck. It does not appear that things are going that well. Yeah, Johnny Chugs in chat says Texas gas is at 350. Don't go offering 350. At 350 a
350 for a
gallon.
gallon of gas.
So that's not great. But yeah, the cash flow numbers were not impressive. The revenue numbers weren't impressive. They said that they had reduced. They blamed the revenue numbers on reduced average selling price. Sure, decline in vehicle deliveries. I think that's more of an issue. They tried to blame that on a disruption at the Fremont factory and also at Giga Berlin. There was an arson attempt in Germany on their factory. Or like someone tried to burn it down or something crazy. They did say that they do have some tailwinds on other sides of the business, namely energy storage. And they also said higher full self-driving revenue recognition year over year due to the release of Auto Park, which is a feature that is now available for North American Tesla owners. Um, they did say that the cost of the Cybertruck ramp is a negative to profitability. They also blamed the reduced average selling price, increase in operating expenses, partly driven by AI, cell advancements, and other R&D projects. Decline in vehicle deliveries was a problem for profitability, lower cost per vehicle. Gross profit, they did see gross profit in growth in the energy and storage division. So they do have that going for them. But overall, it's going to be a tough year. They lost. They didn't lose money, but they spent more than they brought in, cash flow wise. They also said that growth is going to suffer in 2024 when compared to 23, and it seems like the back half of 2025, Greg, that's when they're going to show off. I think this is probably the last big story, and then I'll jump off so the call can start soon. They said, we have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025. These new vehicles include more affordable models, will utilize aspects of the next generation platform as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup. That's important because they don't have to tool their factory for a new vehicle. They're going to be able to build on the existing plant. It's also kind of implies that maybe the Cybertruck sucks and they have to pivot away from making Cybertrucks because they did not guide for any higher production of Cybertrucks. The capacity is still at around 125,000 a year. They did say that they built 1,000 Cybertrucks in a week during the quarter, which is the most they've ever done. And then they had to recall all of them because the gas pedal might kill you. So you got that going for you. They said this update may result in achieving less cost reduction, which means margins are going to compress further than previously expected, but enables us to prudently grow our vehicle volumes in a more efficient manner during uncertain times. This would help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over 2023 production before investing in new manufacturing lines. They also said our purpose-built robotaxi product will continue to pursue a revolutionary unboxed manufacturing strategy. All in all, not a great quarter, but the stock was already down, so it looks like people are buying it because it could have been worse. But tune into this call because Elon could talk all of those gains away in
He
1
could
second.
very easily. Yeah, absolutely.
He's the master of shoving his foot deep into his mouth. So that's going to do it for me, Greg. But I just felt we should react to the earnings, let folks at home know what's going on. And now I got to get back to transcribing this. But
all right. The car shall be starting shortly, everybody.
Yep.